I'm Jim Csek with KelownaNow Live. We're starting a new series on KelownaNow, and this one is on Bitcoin. We're going to do it twice a month with Scott Dedels of BlockRewards. Welcome, Scott. What are we going to talk about today in our first episode of Bitcoin?
Well, first episode of the show, I thought it would make sense to start at the start, and we're going to start at the very start. Part of what's going on right now with Bitcoin is just sort of a dissemination of this idea starting to creep into the mainstream zeitgeist of media and investing. And I thought we would start with a trip down memory lane and a reminder of how people talked about the internet in the early days of the internet.
Sure. And then I just want to disclose, before we start the video, I don't own any Bitcoin. And Scott obviously is biased. He owns Bitcoin and is a big believer in Bitcoin. I'm here as kind of like the guy that needs to get convinced.
And so I guess we should say as well that none of this is investment advice.
Right.
And
we're just kind of explaining it. So lots of questions, lots of myths out there. We're going to try and debunk some of the misinformation, try to provide better information on what it means, especially for people in British Columbia and Canada.
As I was doing that little tease.
Oh, that's
that little mark with the A and then the ring around it.
At?
See, that's what I said.
Mm-hmm.
Katie said she thought it was about.
Yeah. Oh.
But I'd never heard it. I'd never heard it said. I'd always seen the mark, but never heard it said. And then it sounded stupid when I said it. Violence at NBC.
I heard be around big fight in the lunchroom the other week.
There it is. Violence at NBC. GE com. I mean,
well, Allison should know.
What is internet anyway?
Internet is that massive computer network, the one that's becoming really big now.
What do you mean? That's big. How does one? What do you write to it like mail?
No, a lot of people use it and communicate. I guess they can communicate with NBC writers and producers. Allison, can you explain what internet is?
No, she can't say anything in 10 seconds or less.
That's Brian Gumbel.
Yeah.
I don't know who the other two people. Was that Katie Couric or Brian Gumbel for sure was in the middle? That's dating myself probably. That's exactly how I feel about Bitcoin.
Right. Yeah.
So that's the point of that, I guess, right? Because a lot of people don't know what it is. And I can safely say I don't understand it. So
yeah, and I think it's a poignant example too of these technologies that become normal at the time, ones that we use every day today, also had their own time where they were very early and people didn't understand them or didn't think they would be lasting and stick around. And there's a great quote from Nobel Prize winning economist Paul Krugman in 1998. He said that the internet would be no more impactful than the fax machine and would have disappeared by 2005. So people have been getting technology wrong for a long time. And when the internet first arrived, it wasn't like it was this obvious thing either. It was actually a long time where people weren't really sure what the applications were. And I love the example of the internet because the initial base layer protocol of the internet is called TCP/IP, and that was developed in 1969. And it was 1989 when HTTPS, which is like
a mask kind of thing,
several layers on top, was developed. So that was 20 full years at a time when development was happening a lot slower. And so Bitcoin, for a lot of people, sort of came out of nowhere in 2009. But the initial technological components that go into creating Bitcoin date back to the early 70s.
Maybe we can pull up a chart of that Bitcoin there too, just from the thing as we're talking. Like all time though, can you pull up like all time as opposed to that? That looks like a more recent chart if you go back and try to find that.
Yeah. So so these things don't really, they seem like they come out of nowhere, but they don't. And there's an immense amount of work and evolution that goes into these things. And the other thing that's like the internet is, for those who remember what 1994 was like, nobody was thinking about streaming 4K video on a handheld device. We didn't even know how to send an email at that time. And
most stuff's an overnight success 20 years later.
Exactly.
Do you know what I mean? It's the 20 years or 10 years in the back, no different for Meta and all those other ones, that Facebook or whatever. Like they have their moment, right, that they come out, right? And once we get the stock chart up, which no rush for that either, Jason, but there's a lot of work kind of in the background in most technologies, right, that before something kind of, gets adoption, right?
Yeah. Yeah. And if you think about email, it's not like when somebody sent the first email, the next day all of humanity was like, oh, there's email now. We don't need to use physical mail. Like that's over.
We started doing websites here in Kelowna 1999, maybe something like that. I remember we were trying to deal with this one person that ran a deli shop, and he said, "You can't send me an email. Mine's broken." We're just like, "Broken?" Yeah, I said it's full, so can't use it anymore. Because I think back then they used to allocate you like 5 megabytes or something like that, right? So it just wouldn't even be one email today, right? So you would get a 5 megabyte account, and then once it was full, it just would refuse mail. Different times. Different times, yeah. So now...
So in the case of Bitcoin, I think one of the first things is it's extra weird that it's a technological innovation that relates to money. And money is something that we all have grown up with very rigid ideas around who creates money, who's responsible for issuing money. And the core technology behind Bitcoin is something that allows for money that's not...
Oh, you can put that chart back up. That's good, Jason. Yeah.
It's money that's not state-sponsored. It's not money that's sort of deemed money by a government or a central bank. And that idea on its own is really weird. And naturally, people have a gut reaction to, feel unsure about that.
So this chart shows the issuance kind of thing, like 09, just if you go past a little bit back there.
Yeah.
So in September of 2010, 50 cents, I take it, somewhere in there.
Yeah.
And then for the longest time, in that low range up to like 2017, I guess. And it had a bit of a spike there. I think it ran to, I'm going to guess 10,000 in its first initial run up, right?
So there's been
maybe you explain the chart to us. That's probably better. Yeah.
And this is an interesting thing about the chart, because if you were to zoom in, if you were to take out the where it went to the all-time highs, then the zoomed out version, the smaller bump would look like the tiny little bump that's in 14. So that pattern sort of tends to repeat, or so far it's kind of repeated. And so Bitcoin kind of went to 100, then it went to 1,000, and then when we can see that first really big spike was just under 20,000, and then
that's in the May 18 kind of thing, or sorry, it's like around 2018, right?
Yep. And that was when you had all of the Quadriga and all these things and.
Quadriga?
There was, there's always kind of scandals, and that was the FTX of that time. And then it sort of has a sell-off period and a cool down, and then it spiked up again in 21, and then it's been trending down since.
So where's the FTX scandal there? It's in there somewhere. Is it the first drop or is it the second drop there?
Yeah, so basically from the top to the bottom, I would say the very bottom is...
The big peak then? So the 62,000, 63,000 kind of thing?
Yeah, so 69 was the US the US
So this
top.
is US dollars that we're looking at too, right? It says on their USD, right? So.
Yeah, and so there's a couple things that are interesting or noteworthy about this chart, and one of them is that Bitcoin is something that started organically. No one got rich ahead of time by being an insider in Bitcoin, and this is something that makes it different than all of the other cryptocurrencies in the space.
Sorry, say that again. No one got rich?
No insiders.
Oh, okay.
Yeah. So
everybody had to buy their own stuff, kind of thing.
So Bitcoin didn't have what's called a pre-mine, and a pre-mine is where insiders get a whole bunch of the tokens ahead of time, and they get rich in the process of creating it. So nobody created Bitcoin as part of a business.
Satoshi, though, doesn't he own, like this person that we don't know who it is? Doesn't he own a bunch of Bitcoin though too?
Yeah, there is a wallet that has 1 million Bitcoin in it, but the wallet, it has never spent $1. So that wallet has more to do with showing the fact that it does more by doing nothing. And it would be a big deal if that wallet started to move. I think it would be a significant.
So that's 1 million Bitcoin at like right now 45,000 US. That's a few $1 billion.
Yeah. So for somebody if you think about it, if somebody does have access to that wallet,
many billions.
Yeah, and they're not spending it, that's a lot of restraint. So what we can see is that Bitcoin, the price. I was thinking about this because when we had our last conversation, you asked me the question. And I might get this not exactly right, but something to the effect of, do I think it does Bitcoin a disservice when people ascribe really high price targets to Bitcoin? $1 million Bitcoin.
Right.
$1 million is the next high price target. But if you think back to that chart, there was a time when $100 seemed like an insane price target.
Yeah.
And then there was a time when $1,000 and $10,000, and 50,000. So there's been a number of, it's always the next biggest number in Bitcoin that seems like an insane number until it grows. And so this is part of the core understanding of what causes the Bitcoin price to go up and what also creates the possibility that it can continue to go much higher. So I never actually answered that question when we were talking because of the way the conversation went. I do actually think Bitcoin has a very high likelihood of eclipsing $1 million and much higher prices than that. And it's because of the mechanics of what caused Bitcoin to appreciate. And that's a sort of a big topic, and that was kind of...
That's where I get lost, because I don't see it, right? But you know what I mean? That's where I completely get lost, because the value that I see, the value is what I'm willing to pay, right? It's what the next person is willing to pay, because it is a buy and sell kind of market, right?
So it's a money, and this is where it's a little bit of a different, where it starts to get weird, because... We don't tend to think of money in our world as something that has a value on its own, because the money that we're used to having is money that is sort of designed to become less valuable over time. And we experience that by the prices of things going up.
Correct.
But what's actually kind of happening is our money just sort of progressively buys less. So it doesn't cost more today to produce a liter of gasoline than it did in 1970. But the price of gas is 500
They
times.
devalue the dollar by pushing more money into the system.
That's right. Yeah. And so that alone, and every currency does this, every currency in the world does this, except for Bitcoin. And the reason, and so basically when, in conceptualizing how a money might work that wasn't issued by a government, one of the important problems to solve is this question of the rate of issuance. How do they prevent counterfeiting? And so in solving the sort of the basic problem of how to have this trustless internet money where people could transact with each other without having to worry about who was on the other end, they fixed the supply permanently fixed the supply. And so what that does is that one thing makes Bitcoin as a money different than every other money. And so we're in a time where the creation of money is accelerating. And that has to do with a few different factors that have nothing to do with Bitcoin. But the Canadian dollar is a great example. We get to hear a lot about CPI and inflation in the news, and we measure our investment returns against inflation. Are we beating inflation? And that's kind of the idea. Like, are we growing our money faster than the prices of things are going up? But a different way to consider how well you're doing is to consider the rate of the expansion of the money that you're using every day. And that's called M2, the money supply. And the M2 money supply in Canada, on average, you're going to love this stat, has increased by 8.5% per year since 1969. So that means that every 8 or 9 years, there is double the amount of Canadian dollars.
Yep.
So if you think about how fast the housing supply expands in Canada, or so desirable goods, this is why we're seeing structurally in Canada the price of the things that you might actually want to own to preserve the money that you're earning is really getting away from people, because they're creating money faster than we can earn it. And so this is sort of two things. One is it creates an appetite to be able to invest in something that just doesn't get diluted. But it also means that there is an unlimited and never-ending amount of money to chase a potentially and provably finite amount of Bitcoin. So the amount of Bitcoin that will ever exist is fixed, and it's sort of a transparent. It's like if you could imagine, kind of like a three-dimensional abacus that is. Everyone can see through it. Everywhere in the world can see where all the beads on it are. And all they can do is pass those around. You can buy in and you can sell it, but the beads can never move off of the counter.
I got a question for you, though. Doesn't Bitcoin right now trade more as a security than it does as a currency? Because transacting in it is still fairly difficult, but it acts like a security because the value goes up and down, quite volatile.
Yeah, I think commodity is probably a better word. I understand what you're saying. Like, Bitcoin doesn't generate, there's no yield So there's no
just like
dividend.
gold, right? And it's just
in the case of, so how to think about that is money needs to be able to do three things. It needs to be a unit of account and a store of value and a medium of exchange.
Right.
And as something is undergoing the process of becoming a money, medium of exchange tends to be the last thing that happens. So people don't want to accept a medium of exchange before they're comfortable that it is a store of value. And then as it becomes a store of value, it starts to become a unit of account. And there are lots of places in the world where the money is not nearly as reliable as Canada. If you think about Central, South America.
Many countries, especially South American countries. Where they've, like seen their Venezuela, where they've seen their currency depreciate, like, they have an inflation of 3,700%. So,
I mean, and countries like Egypt, Lebanon, they've experienced overnight devaluations of their currency in the last year of 30, 50, 90%. So
Turkey.
Just literally, everyone goes to bed, wake up the next day, and 90% of their money has been confiscated. So in countries like that, that already happens today with the dollar. So like if you go to Argentina, you may find that merchants would rather take dollars than the Argentine peso, and you may see prices side by side. So the dollar there isn't their currency, but it's also a unit of account because it's already been established.
One of the most accepted currencies in the world is the U.S. dollar, and that's how it has the dominance, called the petrodollar, whatever you want to call it. And then the second one would be gold, harder to transact in, but accepted in most countries and held by most central banks.
Totally. Gold has the best track record of any money ever.
Yeah. And it's hard assets is lots of times when people get, like, as you devalue currencies, hard assets is where people run to. And hard assets will be real estate, gold, other precious metals, commodities themselves too, right? People will sometimes buy large iron ore, whatever, they park stuff into different things. You could even say sometimes they park it in, futures, right?
Yeah.
So like corn futures, wheat futures, all that kind of stuff. And I say Bitcoin operates kind of in that spectrum too, right?
So Bitcoin is definitely, one way to think of it is that it's a synthetic commodity, and it's sort of a one of a kind in that, these others projects, cryptocurrency projects that would have an insider team, that's the difference between why those ones are securities and Bitcoin is a commodity. And even
because they issued a bunch of shares to their founders, basically, kind of thing, right? Okay. So let's talk about that a little bit, because Bitcoin is obviously the big dog in the pond of all these other coins, and there was thousands a while ago, and I don't know how many are left now. There's not a lot, though, I don't think, right? So, do they detract from the Bitcoin story, or are they supportive of the Bitcoin story, or?
Yeah, I think that's a really great question, and it's something that is, I think, confusing for a lot of people who aren't really deeply in the space. The other cryptocurrency projects definitely do a disservice to Bitcoin because, part of the issue with why Bitcoin is beneficial and useful is that it has a set of rules that can never change. Bitcoin's not a company. And so all of these other competitors are people basically literally creating a money system out of thin air. And they're in charge of that money system.
And they loaded their pockets.
Yeah.
With at first.
Exactly. And so just fundamentally, there's like an intrinsic moral hazard to the concept that companies can get into this game of creating their own money system, and they're going to compete with something. If we're comparing it to Bitcoin, the competitor is something that is truly neutral and no one is in control of.
And FTX would be a prime example of creating their own currency. They created whatever it was called, FTX, wasn't it, or something like that? Yeah.
So FTX, and that's a great example of the outright fraud, because what they were doing is they would create this FTX token out of thin air and ascribe it a unit value, and then that became an asset on their balance sheet, and then they took out a bunch of debt against that fictional asset.
And spent a lot of money from other people's money and put that in place of it.
Yeah.
Right. Which is, yikes.
It's massive. It's a huge crime for sure. And they were huge political donors, and that's why, like I was saying last time, that story has largely sort of been swept under the rug, and it's because they were on both sides of the U.S. political aisle donating to everyone.
So it's still like the biggest thing for me. Like, I mean, the thing I struggle with, and I've tried to kind of like try to get a better understanding of it, is how does the average person buy, sell, trade, or like what, like is it like, do you go, like there's not a lot of people in Kelowna accepting it as like, you know, you can't go to
merchants,
Subway and use it or whatever. And is there a credit card yet or something? Is there anything that is utilizing Bitcoin?
Yeah. There are a lot of different ways you can spend Bitcoin. It's a great question. You know, I think in Kelowna, it's a smaller market, and it's probably less of an urgent thing. That there are 50 or 100 merchants in Vancouver, much bigger center, that do it, and that's still a very small number. But again, we're in a country where our money works kind of good compared to like where you really see the Bitcoin spending is in the countries where
currencies aren't that good.
Yeah, they just need a money that they can pass to each other back and forth.
Because Tesla was accepting it for a while.
Yeah.
They did it for a while. Elon accepted Bitcoin and Doge, I think.
Yeah.
I can't remember. I don't know if he ever took Doge, but they were taking Bitcoin for Tesla.
Yeah, so I think they had to get out of that game because Tesla depends heavily right now on these carbon credits subsidies. And the scuttlebutt was that their supporting of Bitcoin was going to jeopardize some of that. And of course, even that has changed a lot. The Bitcoin ETFs that launched in the US in January, we were talking about this last time we got together.
So that's one way to trade it outside of actually buying Bitcoin, though. So you can buy the ETF, right?
Yeah, and so the ETFs have really changed the ESG narrative. You know, for the last 4 years that we were hearing news stories about how Bitcoin was going to consume all the energy in the world and boil the oceans. And Bitcoin mining is actually an extremely green technology that incentivizes all kinds of ingenuity around finding and sourcing cheap renewable electricity. And so the ETFs have kind of changed that narrative a little bit. And actually just today, Fidelity is one of I think the 5th largest asset manager in the US. And in Canada, Fidelity has now included a 1% allocation to Bitcoin in their conservative portfolio. So the narrative is really changing. If you think about that, what that means, like that's a pretty significant...
Yeah, no, for sure. If the funds are buying in, it definitely will add some legitimacy to the process. But as I still say, like, you know, like it's still very mysterious. That's the big, you know, I think, other than buying an ETF, right? Like you're kind of buying a security in a way, right?
Yeah.
So
and that's where I think, you know, the best thing or the easiest thing to do if you find a preferred way of buying it in Canada is just sort of buying it and starting by buying it and storing it safely and holding it for a little while. Right. And actually, maybe that first graph was worth having a look at right now. What we're looking at right now is what's happened with the purchasing of Bitcoin at sort of a macro level this year. And the green blocks are the number of Bitcoin that have been bought by the US ETFs since.
So that's 175,000 tokens?
Yeah, 175,000 Bitcoins. So there's only 21 million. And so that's 1 month.
Wow.
And the red is there was a trust that was operating at a large scale, grayscale.
And they sold 141,000 tokens?
So because there's a whole bunch of these ETFs, they're competing with each other on fees. And the ETF fees are really low, like 0.2%. And the trust had, I think, a fee of like 150 basis points. And so we've just seen an exodus out of it. And so in spite of that, so people have sort of been saying, you know, look, ETFs went live and it's been a sell the news event. Bitcoin's flopped. The price has gone down since that happened. But there's been a ton of this sell pressure of the Bitcoins leaving the Grayscale Trust. And so that has been largely absorbed and it's going to end very soon. And those two columns on the right are sort of the back half of why, another reason why Bitcoin's price couldn't continue to go up. And that's because the number of Bitcoin that get released on a day cuts in half every 4 years. And so how you arrive at a permanently fixed number is the ones that are left to be sort of mined, it needs to reduce.
But they need more and more computing power to get the last coins though too.
Yeah.
Right? That's kind of the energy problem, right? Like, I mean, you need massive amounts of computer power to kind of solve these equations, basically.
Yeah. So it's actually not a problem. I think that we're going to get to a place in the very near future where energy is priced in Bitcoin. And it's because there's a provable amount of energy that goes into mining a Bitcoin. And so you can actually convert energy into Bitcoin by mining it. And then you can convert Bitcoin back into energy by using Bitcoin to buy energy.
Maybe explain that to me, because I'm not following that.
Yeah. So Bitcoin is a global network of computing.
Yep.
And it's a global currency. And so you can move Bitcoins anywhere in the world using the internet. And so you can use electricity anywhere in the world to mine Bitcoin. So the biggest variable cost in Bitcoin mining is the cost of electricity. And so miners all over the world, Africa, El Salvador, are competing for these Bitcoin rewards.
Yeah.
And when they're doing that, they are literally turning electricity into Bitcoin. So they're monetizing electricity by turning it into...
Right, they're switching and trading it for a Bitcoin. Yeah.
And then that Bitcoin gets sold, and someone theoretically somewhere else could take that Bitcoin and then they could buy energy with it. And so on an aggregate level, it has the...
But they could not buy energy, though. They could buy a sandwich.
They could buy a sandwich.
Right. So.
But it's a way of measuring an input and an output.
Right. I mean, I just like hydrogen is one of the things they talk about is they're making hydrogen with electricity. They're basically turning hydrogen into a store of energy. And that's kind of what you're saying, right? Yeah. So they're saying you take electricity, which you can't really store other than in batteries, but you can store hydrogen longer.
Yeah. And so if you think about that idea with Bitcoin, batteries don't store energy very well, and neither do electrical grids. So this is the idea about people are concerned about the electricity consumption that Bitcoin mining might cause over time, but a lot of electricity or energy is stranded and just lost because generators, power plants, they run full throttle 24/7, even though the usage of electricity is cyclical depending on like what's going on.
Well, they do throttle it up and down, though. They do.
Well, depending on what kind of
demand and how big the grid is and all that stuff.
Yeah.
But Fortis manages their grid based on what they think demand is.
Yeah, but not every grid runs on the same power systems that we do.
Right, for sure. Like in other worlds, I mean, countries, it's probably either full out or not.
That's right.
Right. So, but here they do have a way to throttle up and down, right? Because during that last cold freeze, we ramped up our electricity so that we could sell some to Alberta and the Pacific Northwest. Mm-hmm. But we have hydro dams that we can do more.
Yeah. So it's an interesting. That's just one potential use.
Yeah. And then Block Rewards, you're sponsoring the show. Maybe explain Block Rewards as we get into this too.
Yeah,
right?
for sure. So this is something that has been on my mind for a long time, and as you sort of understand, I got into Bitcoin in the first place because when I understood this thing was going to be sort of likely to be a very enduring and evolving technology, it's a money. So it makes sense to me that Bitcoin has a place in how people earn money. And originally, I thought it was something to do with sort of playing an insurance role on pension plans, because pension plans are sort of made up about 40% bonds.
Right.
And the bond market is going to be really exposed to fluctuating interest rates and money printing. And so both of these factors are going to challenge the traditional mathematics of how pensions operate. So I got interested in Bitcoin because I have been involved in that kind of work, benefits and pensions. And as I understood it more, it just makes more sense to me that Bitcoin is a tool that could be used a lot of different ways for recruiting and retaining staff. And I think this is the next weird idea. But it's really an innovation that enables, for the first time in human history, a free market competition in money. And Bitcoin is a money that offers its an optional participation in a money that doesn't get debased. So if you think about trading your time or trading your employees' time for a melting ice cube or a sort of bar of digital gold, that's easy to work into payroll. It'd be difficult to do a weekly gold payroll purchase where everyone got their. It's complicated, Bitcoin is very flexible in terms of how much you can buy and how often. And
there is some gold-backed securities that they're working on too, I think, but it's definitely like there is a need for a worldwide currency for sure. And the US dollar, I mean, they would say it's that, and then the euro would argue that it's the euro, and then but they have those issues. And then gold is in that mix, but it's very hard to transact and carry around and even separate. Like somebody says, well, that's going to be like 2 grams of gold, and you have an ounce of gold. Like how do you know what I mean? Are you cutting it, or what are you doing with it? Other than if it was like an NFT where you were, that might be the future of gold too, where you're taking and moving it around in that way. But I mean, I can see the use of a Bitcoin, like, because then you can transact worldwide without having to worry about exchange rates, right? Because then a sandwich in New York City is worth the same as it is in London versus wherever it is, right?
Yeah.
So,
yeah, I mean, and this kind of thing, there's a school of thought that's called Austrian economics, and it's become less popular as we've gone into a political era of money printing over the last kind of 100 years. But the Austrian economists always believed that if the unit of account was broken, then it was impossible for the market to determine what the price of anything should be. And so this is your idea, basically. A global money would enable us to properly kind of price everything, because right now, with all these different countries running their own monies with varying degrees of success, but they're all expanding and hyperinflating in slow motion. So we're measuring it against the U.S. dollar, but even the U.S. dollar itself is the U.S. debt right now is piling up at an exponential level. It took them 200 years to accumulate $1 trillion of debt, and they accumulated $1 trillion in July.
Mm-hmm.
So,
and then the others, just on the practicality of it, like when you go to the States, like I'm going to Hawaii here, and you exchange your money, they charge you a service fee, and when you change it back, they charge you a service fee. So those just the service fees alone will end up being like 6-7% just by transacting in the different money. And even if you put it on your credit card, they charge you a service fee, right? So that they charge you the buy-sell difference, right? Yeah. Whereas a global currency wouldn't do that, right?
Yeah,
because it's like you're trading in the currency. I think, and that way, I think I still just don't understand Bitcoin. And if it was backed by gold, I'd be like, I'd be all in. But I'm still,
So that's a
puzzled, right?
Yeah.
by who runs it, what's like, you know what I mean? Like that's the scary part for me.
Yeah, and some of that has gets eased as you better understand the scope of the computing network. So this decentralized network of Bitcoin miners that's all over the world. It is the largest computer network in the world. So the Bitcoin mining network is bigger than the FBI, the NSA. There's something that's, if you're thinking about, what are the things that could cause Bitcoin to fail, and what might cause it to break?
But I'm going to ask you a question. So you say those things, but who verifies that? Like who's saying it's bigger than the FBI? Who's, you know what I mean? Like, who's the verification?
So there is a measurement that's called exahash, which reverse engineers the amount of electricity that was used to mine a block, and they can tell how much computing power is going into producing that block. And so it's measurable. So this is why this actually gets to your thing about if it was backed by gold. Bitcoin is backed by the network and the investment and the power of the network. Yeah.
But I don't know who runs the network. I know that you say everybody runs the network.
No,
right?
nobody runs the network. I mean, you can get all kinds of
nobody
analytics.
And everybody, right?
So we can see where the miners are, where the biggest clusters of them are, and
so block rewards.
Yeah. Oh yeah. So we didn't finish that thought. BlockRewards is a company that's dedicated to helping Canadian employers figure out how this thing is going to become a tool for retention and recruitment. And so there are lots of different exciting ways, and I'm sort of thrilled to be at the forefront of this new space. And so, getting back to that early idea, would have been a time in the 90s where figuring out how to use email would have been weird, but it was also something that would have made the workplace better. And Bitcoin is another one of those things, and I just firmly believe that.
So BlockRewards is something you're helping companies kind of get involved with Bitcoin so they can start paying their employees in Bitcoin? Is that kind of the thing?
There are a lot of different potential applications for Bitcoin in a compensation rewards structure, and we do a number of different things.
Cool.
Yeah.
Anything else you want to hit on in this first episode?
Did we have one more chart?
Slide?
Yeah, maybe we can save that for another time.
Okay.
Yeah.
What are we going to talk about next time?
What are we going to talk about next time? That's a good question. We are going to talk about mining and the mechanics of the Bitcoin halving next time.
The Bitcoin mining. We did a news release just a couple of days ago, and there was I don't think they're denying all crypto miners in British Columbia, but new ones they're kind of like putting a pause on. I think there's a 2-year pause on adding new Bitcoin miners to the British Columbia grid. Yeah,
very interesting debate, and China has tried this, and it's been something that has been for them on a large scale, sort of a disastrous decision. So
I had a friend that tried to do some Bitcoin mining, like on a small scale, and ended up like he ended up that somebody stole all his Bitcoin miners or whatever. But like, I don't think you can do it on a small scale anymore. Like, you can't run a Bitcoin miner in your house, right?
Yeah. So it's called a block reward. That's the name of where the name comes from.
Okay.
Block reward is the Bitcoin that are released it's about 10 minutes every time a block gets minted onto the Bitcoin blockchain. And every once in a while, a single computer somewhere in the world
the lottery?
Will win a block reward.
Oh, yeah. There you go.
Yeah, so that's it's 6
So it's
Bitcoin.
like playing a casino.
Yeah, so it's a lot of money if you win.
Well, there you go. That's all we have for this episode, and you've been watching KelownaNow live in our new series on Bitcoin. Twice a month, you can look for myself and Scott. And until I think we're doing in about 2 weeks, we'll do the second episode, and we'll keep developing this. And if you have questions, you can get a hold of Scott at...
you can get me at scott@blockrewards.ca or on Twitter at Lantern Bitcoin.
There you go. And I think you're on LinkedIn as well.
Yeah.
Right. So until next time, thank you for watching KelownaNow.